All right, let's talk about the legendary trader Alan Farley. We're going to distill his hard-won wisdom, his 30 rules for swing trading, into a super practical guide. We're breaking it down into 3 key pillars: getting your mindset right, nailing the strategy, and having rock-solid discipline. Ready? Let's dive in.
Okay, so Farley's first rule is a gem, and it's a little counterintuitive. If you have to look, it isn't there. Think about that. What he's saying is the best trades, the real opportunities, they don't hide. They should literally jump off the chart and scream at you. If you're squinting, second-guessing, and trying to force a pattern to fit, just stop. The opportunity's probably not there. It's a fantastic filter to stop you from overthinking.
So, just a super quick refresher to make sure we're on the same page. What is swing trading? Well, it's all about capturing those market swings, the ups and downs that happen over a few days or even a few weeks. So we're not day trading in and out in minutes, and we're not long-term investing for years. It's that sweet spot in the middle. Okay? Got it? Good. Because now we can get into the most important part, the mindset.
First up, the master's mindset. And this is so important. Farley says that before you even look at a single chart, you have to get your head right. Your psychology. That's your greatest asset. Honestly, this is where most people crash and burn, so this is exactly where we need to begin.
Whoa, okay. This one sounds a bit harsh, doesn't it? Your success depends on the misfortune of others. But you gotta understand what he means. Trading is basically a zero-sum game. For you to win, someone else has to lose. Your job is to be the one who capitalizes on the crowd's fear, greed, and bad decisions. It's not about being a bad person, it's about being a realist. This is a competition.
Now this is one of my absolute favorites. Find the setup that scares you the most. Why? Because it completely flips everything you think you know. See, if a trade feels easy, comfortable, and obvious, chances are you're too late. The whole world has seen it. The real money is in the trades that make your stomach do a little flip, the ones that go against the herd. Comfort is the enemy of profit. You have to get comfortable with being uncomfortable.
So let's just boil this down to a few core ideas. Number 1, amateurs focus on how much they can make. Pros focus on how much they can lose. Huge difference. Number 2, that little voice in your head, your gut feeling, that's your intuition. It's your experience talking to you. So listen to it. And finally, just remember, the market doesn't owe you anything. It's not an ATM. You have to earn every single penny.
Okay, mindset's dialed in. Now let's talk about reading the charts. The big idea here is simple but powerful. Price has memory. Every move on a chart is a footprint from a past battle between bulls and bears. And if you learn to read those footprints, you can predict where they're going next.
And this is a perfect example of what I mean. Let's say a stock hits $100 back in January. Then it sells off. A few months later, it climbs all the way back up to that same $100 level. You better believe that's a critical spot. That price level is a battleground. How the stock acts when it gets back there is a massive clue about what's coming. That's what we mean when we say price has memory.
All right, here's one of the simplest, most powerful lines in the sand you can use, the 200-day moving average. Think of it like a continental divide for the market. If the price is trading above that line, the bulls are in charge. Greed is the dominant emotion, and people are looking for any excuse to buy the dip. But if the price is trading below that line, now fear is in control. The bears own the field, and every little rally is likely to get slammed back down. It's a super quick way to check the market's pulse. Pay attention to this one, because it's a huge trap for new traders. You see a chart pattern that looks like it's straight out of a textbook. It's perfect, flawless, and you think, this is it. Wrong. Farley warns that those perfect patterns are usually traps. Why? Because everyone sees them. They're designed to lure in the rookies. The setups that actually work are often a little messy. They have some quirks. Don't fall for perfection. Okay, we've got the mindset. We know how to look for patterns. Now it's time to get down to brass tacks. Let's talk strategy. When do you actually get into a trade? And maybe more importantly, when do you stay out? Here's a classic setup that's all about playing human psychology. So, a stock just blasted through to a new high. What happens? A huge chunk of people who missed it are kicking themselves. They have major FOMO, fear of missing out. They're just praying for a tiny little dip so they can jump in. And that's your cue. You don't chase the breakout. You wait for that first pullback, and then you buy right alongside all those desperate latecomers. You're basically using their FOMO as fuel. All right, here's a few simple but golden rules. 1. Buy at support, sell at resistance. It sounds simple, but you'll be amazed how many people get it backward.
Think of support as a floor and resistance as a ceiling. 2. Don't short a stock that's already in a free fall. It's like jumping in front of a speeding train. Wait for it to bounce first, then look for your entry. And 3. Stay away from the opening bell. The first 30 minutes are pure chaos. Just let the dust settle before you even think about making a move.
This is non-negotiable, absolutely critical. Before you ever click buy, you must know where your exit is. I'm serious. Where is your stop loss if you're wrong? Where are you taking profits if you're right? If you can't answer those two questions instantly, you are not ready to take the trade, period. Without an exit plan, you're not trading, you're just gambling.
And that brings us to our last section, which might just be the most important one of all: discipline. This is the foundation of survival in the markets. All the smarts in the world won't save you if you can't control yourself. So let's talk about the big don'ts.
Okay, listen up. You are gonna have losing trades. It's gonna happen. It's part of the business. The real disaster isn't the loss itself. It's what you do next. If you immediately jump back in trying to get even, you're done for. That's called revenge trading, and it is the fastest way to blow up your account. Take the hit, walk away from the screen, clear your head. The next trade has to be completely independent of the last one.
Here's another one. See that green number on your screen? That big open profit? Guess what? It's not your money. Not yet. It belongs to the market until you hit the sell button. I've seen it 1,000 times. The market can snatch that profit back in a heartbeat. So don't start spending it in your head. A profit is only real once it's in your account.
And really, it all comes back to this: discipline. You know, most traders don't fail because they don't know enough. They know the rules. They fail because they don't have the discipline to follow their own rules, day in and day out. That's the real battle.
And just a few more rapid-fire don'ts to keep you safe. 1. Forget the company's story. We're swing traders. We trade charts, not fundamentals. 2. Stop trying to be Warren Buffett. He's a long-term investor. You are not. Your goals are completely different. 3. If you had a bad day at home, stay away from the market. Don't let your personal life mess with your portfolio. And last, if you're doing this for excitement, go to Vegas. This is a business, not a game.
So, after all of this, what's the big secret? You're probably wondering, okay, what's the holy grail, right? There has to be some magic indicator, some secret formula that just prints money. What is it?
And here's the answer. You ready? The secret is that there is no secret. I know, it's not what you wanted to hear. But the closest thing we have to a holy grail in trading is boring, it's not sexy, but it's the absolute truth. It's solid risk management. That's it. That's the whole game. Master your risk, protect your capital, and then you'll have a fighting chance to master the market. That's the real wisdom from Alan Farley.